Hello students, welcome to Accounting Explained at AccountWise Academy. This is Latha Venkateshwaran. Students, this is the third video on WDV method of depreciation. In this video, I have taken an exam problem and explained it in a very easy way so that by the end of the video, you will be able to solve any problem asked on WDV method of depreciation and get full marks. The question is as follows. On 1st January 2021, Hindustan Limited purchased machinery for rupees 12 lakhs and on 30th June 2022, one more machine of worth 2 lakhs was bought. On 31st March 2023, one of the original machinery that was bought on 1st January 2021, which had a cost of rupees 50,000, was found to have become obsolete and was sold as scrap for rupees 7,000. It was replaced on that date by a new machine costing rupees 80,000. Depreciation is to be provided at 15% per annum on return down value method. Accounts are closed on 31st December every year. Show machinery account for 3 years. From this question, we can see that the financial year or the accounting year for Hindustan Limited is from 1st January to 31st December. Before proceeding further, I want you to understand this table which I have created. Okay. So this table consists of the columns such as purchased on, total cost, value of the machinery sold, selling price of the machinery sold, machinery unsold and sold on. First, let us see on 1st January 2021, 12 lakhs worth of machinery was bought. So new machinery purchased on 1st January 2021, 12 lakhs. What happened? On 31st March 2023, one of the machinery that was bought on 1st January 2021 had a cost of 50,000, was sold as a scrap for 7,000. So value of the machinery sold, I have named this machinery as M1 is 50,000. Selling price of the machinery sold M1 is 7,000. See here 7,000 sold as a scrap, so 7,000. Now machinery unsold is 11,50,000. I have named that as M2. Okay, this machinery was sold on 31st March 2023. Next, on 30th June 2022, one more machine worth 2 lakhs was bought. So new machinery M3, I have named it as M3, was bought on 30th June 2022 for rupees 2 lakhs. Okay, and again on 31st March 2023, new machine costing rupees 80,000 was bought. New machine that I have named it as M4, 31st March 2023 is the purchase date and it was bought for 80,000. As we have already seen, the accounting period is from 1st January to 31st December. Let us proceed with the answer now. We are going to open the ledger account in the books of Hindustan Limited, machinery account. Left side it is DR, right side it is CR. On the debit side we have the columns of date, particulars, inner amount column, outer amount column. Similarly on the credit side also we have the columns of date, particulars, amount, inner amount column and the outer amount column. Now coming to the question, on 1st January 2021, Hindustan Limited purchased machinery for rupees 12 lakhs. What did we do? We divided this machinery into two, no? M1 50,000 that was sold in between and M2 11,50,000. I would suggest you to name the machineries as M1, M2 and so on as and when you purchase a machinery, because it will be very easy to find out the depreciation first, and also when you buy multiple machineries and when you are going to sell some of the machineries in between, it will be easy, very easy for you to find out the profit or loss on the sale of the machinery, which is very crucial for solving the depreciation problem. Okay. So name the machinery as M1, M2 in the first place as we did in the tabular column in the previously which slide which we saw. Okay. So when you buy machinery, what is the journal entry? the asset value increases, so machinery is an asset, that value increases, it has to be debited. Again, we are going to buy from bank, right? Bank value decreases. When the asset value decreases, it has to be credited to bank account. Now we have opened the machinery account. Here, the journal entry to bank, that is bank is credited. Now in the ledger account, it will be debited to bank account. Instead of writing the full amount, we are going to divide and write M1 as 50,000 and M2 as 11,50,000, and in the outer column you will have the total amount of 12 lakhs. Okay. Now on seeing the question, we don't have any other transaction for 2021. This machinery was bought on 1st January and we have to close the accounts on 31st December. So we have to find out the depreciation for the whole year. The entry for the depreciation, journal entry for the depreciation is what? Depreciation is an expense, right? So depreciation account has to be debited since it's an expense. So depreciation account debit to machinery value has to be decreased. Machinery is an asset. When the value of the machinery is decreased, it has to be credited. So to machinery account, this is the entry. We are doing machinery account here. Here depreciation in the journal entry, depreciation is debited. So in the machinery account, it has to be credited by depreciation. Again, instead of taking the depreciation for 12 lakhs directly, we are going to find out for each machinery separately. M1 50,000 into 15%, 7,500, and M2 11,50,000 into 15%, 1,72,500. In the outer column, we will have the total depreciation of 12 lakhs. Okay. On seeing the ledger account, we find out the balance of or the total of debit side is more. So we take the total of debit side, that is 12 lakhs on both the sides, 12 lakhs, 12 lakhs. Now the balance carried down is on 31/3/2021, by balance carried down is 10,20,000 by deducting 12 lakhs minus 1,80,000. But that is not enough. No, we have to find out the value of M1 and M2 separately. So what you have to do? We have to deduct 50,000 first from 7,500 and write 42,500. And again, what you are going to do is, you are going to deduct 11,50,000 minus 1,72,500 and write 9,77,500. These two, when total, you will get 10,20,000. That is tallying. So our 10,20,000 is coming correct, right? No. Now on 1/1/2022, the balance carried down will become as to balance brought down. Similarly, we are going to maintain M1 as 42,500 and M2 as 9,77,500 and take the total of 10,20,000 to the outer column. Yes, we have purchased some machinery on 31st March 2023. No. On 30th June 2022, one more machine of worth 2 lakhs was bought. Okay, on 30th June 2022. So we know machinery to bank. So here the machinery account to bank account 2 lakhs. Okay, now we have to find out depreciation for 42,500 and 9,77,500 for 1 year. But for the new machinery, which is what M3, we have named it this as M3. Okay, which we have bought for 2 lakhs has to be charged only for 6 months because we have bought this on 30th June. On 31/12/2022, by depreciation, M1 is 42,500 into 15%, 6,375. M2 is 9,77,500 into 15%, 1,46,625. M3 is, as I told you, it is only for 6 months. 2 lakhs into 15% into 6/12, 15,000. On the outer column, the total depreciation amount for the 3 machineries, that is rather 2 machineries together, is 1,68,000. Okay. Now on seeing, we find out the debit side total is more. So we take the debit side total of 12,20,000, that is 10,20,000 plus 2 lakh is 12,20,000 on both the sides, debit and the credit side. On deducting 12,20,000 from 1,68,000, you get 10,52,000 as the balance. Now let us find out the balance of M1, M2 and M3 separately. So 42,500 less 6,375 will give the balance of M1 as 36,125. Similarly, M2 9,77,500 minus 1,46,625 is 8,30,875 is the balance for M2. M3 is 2 lakhs minus 15,000. M3 will be 1,85,000. On totaling these three balances, we get 10,52,000. Okay. Now on 1,123, this has to be brought down. Two balance brought down. M1 36,125, M2 830,875 and M3 is 1,85,000, which gives a total of 10,52,000 for these two missionaries together. On 31st, see the question, on 31st March 2023, another machine was bought for rupees 80,000. So on 31/3/2023, we are buying another machinery. So what is the journal entry for that? Machinery account debit to bank. This is machinery account. So bank has to be debited to machinery M4 80,000. And on the same date of 30th March 2023, what has happened? The original machinery that was bought on 1st January 2021, which had a cost of 50,000, found to be obsolete and was sold for rupees 7,000. So what is the journal entry for selling the machinery? When you sell the machinery, you receive money. So when you receive the money, your bank account increases. When the bank increases, what will happen? Bank is an asset, so it has to be debited. Bank account debit to machinery value decreases because you are selling it. When the asset value decreases, it has to be credited. So the entry is bank account debit to machinery account. This is machinery account. In the journal entry, bank account is debited. So in the machinery account on 31/12/2023, it will be by bank 7,000 rupees. Now the next step is to find out profit or loss on the sale of machinery. Let's do it now. M1 machinery is sold for 7,000 rupees. The book value of M1 machinery as on 1/1/23 is 36,125. This 36,125 we are going to take it for the calculation of profit or loss on the sale of machinery. This is the working note for finding out the profit or loss on the sale of machinery M1. Just now we saw that the book value of the machinery sold as on 1/1/23 is 36,125. Less depreciation from 1/1 to 31/3/23. Because we have sold the machinery on 31/3/23, we have to find out the depreciation only for 3 months, right? So 36 on 36,125 into 15% into 3/12. Which comes to 1355. On deducting 36,125 from 1355, we get 34,770. This is the book value of the machinery sold as on 31/3/123. Sorry, 31/3/2023. From this, we have to deduct the sale proceeds of the machinery. Less sale proceeds is 7,000 rupees. We get 27,770. Here we have to know that if the book value is greater than the sale proceeds, then you have incurred loss. Similarly, if the book value is lesser than the sale proceeds, then you have earned profit. In this case, we have encountered the first case where the book value is greater than the sale proceeds. So we have loss on sale of machinery of rupees 27,770, which has to be taken to the P&L account. This is the machinery account which we were doing. Now let us proceed with the machinery account. Now M1 machinery is sold, right? We have to write out the depreciation for M1 for 3 months because it has been used from 1/1 to 31/3/23. It was sold on 31/3/23, right? So for 3 months, we have to find out the depreciation. 36,125 into 15% into 3/12, which comes to 1355. This we have written in our working note also. Then we have to write the entry for loss on sale of machinery. when there is a loss, P&L has to be taken into account. It has to be taken to P&L account, I told you. Whether it is loss or profit, it has to be taken to the P&L account. Okay. Now it is a loss. So P&L account has to be debited since it is a loss. And machinery value is going to be reduced. When the asset value is reduced, we have to credit it. So machinery account is credited. This is machinery account. In the journal entry, we have debited P&L. So in the ledger of machinery account, we have to credit it by P&L. We have to refer to our working note. We know that the balance of loss on sale of machinery is 27,770. Now we have to write the entry for depreciation for rest of the machinery. M1 should be taken out as it is sold. Now we have only M2, M3 and M4. For M2 and M3 we have to find out for 1 year, and for M4, since it is bought on 31/3/2023, we have to calculate from 1/4 to 31/12 only. That is for 9 months only. Okay. For M2 it is 8,30,875 into 15%, it is 1,24,631. For M3 it is 1,85,000 into 15%, it is 27,750. For M4 it is 80,000 into 15% into 9/12, that is for 9 months, it is 9,000. So the depreciation, when totaling all these three, we get 1,61,381 as a total depreciation. On seeing, we find out the total of debit side is more. So we take the total of debit side, that is 10,52,000 plus 80,000, which comes to 11,32,000 on both the sides, debit and the credit side. On deducting 11,32,000 from 7,000,1355, 27,770 and 161,381, we get a balance of 9,34,494. That is on 31/12/2023 by balance carried down. With this, we are finishing this exam problem. If you would like to inquire about the online classes which I take, or to get more worksheets, you can contact us at acc.wiseacademy@gmail.com.